What is an income statement? The income statement, also called the profit and loss statement, summarizes a company's operating performance over some period, such as a month, a quarter, or a year. Basically, the income statement answers the question, did the company make money? The income statement does not show the flow of cash. There are three basic categories or components of an income statement. There's revenue, expenses, and profit or loss. Revenues are sales of goods or services. Revenue is recognized when it is earned. In other words, when the goods or services have been provided to the customer, regardless of when payment is collected from the customer. Expenses are the costs associated with generating revenue. These include things like employee wages, office expenses, and taxes. Expenses are recognized when they are incurred, regardless of when payment is made. Profit is revenues minus expenses. A company generates a profit when revenues are greater than expenses and generates a loss when revenues are less than expenses. You can find additional educational materials, including our beginner's course on reading financial statements, on our website at fundamentalinvestinginstitute.com.